they just.
Is it over?
It's just started.
Oh, okay.
First inning, but Boston just hit a home run.
Fucking Red Sox.
Okay.
I know. What channel?
I don't. It was on my.
That's right. I'll figure it out. I thought that already. Major League Baseball, assume it's that. Yep. Okay, people, welcome to Capital Advantage Tutoring's live Q&A during the frickin' Yankee game. I must really like you guys a lot. Okay. Welcome on, and a couple things. If you are looking for some good, cheap resources, reach out to Achievable. I have a link down there. STC is pretty damn solid. If you need tutoring, reach out to me. I'm series7exam.org. If you can't afford my rates and you want somebody on the lighter side, a little cheaper, not quite as good, not as funny, Michael Weiss over at series7examtutor.com. And as Alicia knows, it's series7examtutor.com, not just randomseries7.com. Emmanuel, did you really just say that? I'm going to start giving you wrong answers. Some free resources. You got me, obviously, the GOAT. You have Dean Tinney over it. He's more long form. And then we have Brandon Rith, who wrote the questions for Achievable. And he has his own thing called Basic Wisdom, which is pretty phenomenal. And I think we're good to go. Okay, so let's get going. Teresa, I hope I answered your question before. I am doing fabulous. Well, of course, the Red Sox hit a home run right off the start, but that's just, we're spotting him a lead, so it's okay. Okay. Emily, I don't know what, I know you emailed me that. I don't know what you mean by that. I don't know. Understand it just means you can't just fucking memorize. Okay. So if you're going to try to learn this stuff, I'm really insulted by that, Joe. That's horrible. The Yankees are not done tonight. After didn't they sweep them in that? We're done. We're fine. I'm serious. I'm going to give you wrong answers when you ask. Okay. So now, Emily, so when I say understand stuff, you need to understand it. You don't need to understand it like you own it, but you need to understand what a preferred stock is, what a bond is, what a common stock is. You have to be able to differentiate between them instead of just memorizing buzzwords. That's kind of the way it works. Okay. So if you're on here and you're doing stuff and you're trying to figure common stock and preferred, you got to go in deeper into it and figure it out and kind of get what they are meaning. Again, the good thing is for the SIE and the 6 is it's not crazy. Like you don't have to know options that well. You don't have to go crazy in being a trader. You just have to understand that if somebody says common stock or preferred or bonds, you know what the hell the difference is. That's the kind of way it is. Okay. Okay. Ooh, Georgiana, finally. It's only been, 8 years till you got, hey, Trish, how are you? Finally have a test day. Thank God, Georgiana. It's finally over with. You can move on to the 66 or 65. Just get this done. Okay. Okay. Okay, so Teresa, in suitability, is there some type of rule of thumb to help you choose which funds, etc.? For instance, do you choose objective versus tax bracket or vice versa? There's not a rule of thumb. You have to, first of all, every time horizon is everything, right? So the most important thing for the Series 7, Series 6 SIE exam, I have to keep saying that, you have to know that time horizon is everything, okay? Time horizon, look at that. Time horizon is everything. So if you have a 20-year-old, they have 50 to 60 years of investing, you can be much more, you can take a lot more risk. But you look at time horizon and then you look at their risk tolerance. Are they willing to take risk or not? Then you look at, are they rich or not? If they're rich, you're going to put them in munis. They're not going to throw 80 different things in you and say, you have to choose which one is better. They're going to give you a couple of scenarios like, 72-year-old woman, she's living on Social Security and she wants to invest her money. Okay, so first of all, if she's living on Social Security, she's not rich. So she's on the poor side. So munis are out. And she wants to do her income. And so maybe you have to go on the less risky side. So you're really not going to do corporates unless it's like investment grade. So you maybe do an income, if you're thinking mutual funds, maybe you do an income fund or a a government bond fund, but not a muni bond fund. So tax bracket matters, but it's time horizon, then and then risk tolerance, and then the tax stuff. But if they say rich or they worry about taxes, then that's the first thing. They're going to make it more clear than you think. Okay. Yeah, life and health shouldn't be bad. Okay, Cassandra. So you're taking it next Tuesday. How do you feel? Okay. How do you feel on it? Are you going through the videos? Do you feel okay? Did you do my exams online? And how do you feel with them? Okay. 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 So I want you to think, when you think of, Alicia, when you think of an endowment policy, it's basically you're getting paid a lump sum. It's like life insurance. So it's not a security. So an endowment is not a security because you're getting money. Like a lot of times, like you'll see, I think like a charity will set up an endowment toward like the Lincoln Center or something like that. It's a big lump sum toward them. Okay. Joe, I probably just won't give you. So get the life and health done, and then just jump on the Series 7, and that's the best way to do it. Okay. Okay, Ben, on the accounting, I know you asked about the acronyms. I don't have a lot of acronym for the 66. I wouldn't worry too much about all the accounting stuff. I think there's going to be less on that than there was on the 7. But for the Series 66, really, you should know PE ratio. You should know how to do earnings per share. Maybe know what working capital is, which is current assets minus current liabilities. Maybe know what net worth is, which is total assets minus total liabilities. Current ratio is current assets divided by current liabilities. That's not, just don't remember all of them. Just remember the ones I just said. So you want to know PE ratio, earnings per share, current ratio, net worth, working capital, that kind of thing. Don't go too crazy. Again, not a lot of math in the exam. Okay. You see, Emily has a life and health already. She's just working on the SIE and stuff. Okay. Good, Emily. That's awesome. So the ratio, okay, the ratios. Okay. So you don't have to know that many of them. I mean, if you're talking about like the bond ratios, no, don't worry about that so much. I mean, debt coverage ratio is how much money we have. How much money we have versus how much we have in revenue versus how much our debt service is. Current ratio, you might have to know, which is current assets divided by current liabilities. Just memorize those. You don't have to know how they work all the time, but know that current ratio is all about liquidity. Okay. Okay, 310.51. Those are good scores. Okay. Mandy, I will. Everyone wants RVB DVP, but it's because STC asked about it, and I'm going to explain it. So 310.50. Okay. First of all, let me work the way down. Alicia, good. You're getting almost done, and then you can start taking quizzes and go from there. 66, yes, the Series 66 is hard. Is it harder than the Series 7? Well, it depends. I mean, if you understand the concepts pretty well, and it seems like the people who fail on the 7 and then pass it the second time do much better on the 66 because they had to study deeper. Think of the 66 as taking the Series 7 concepts a little deeper and then adding in 50 questions on rules and regs from the state. So it is difficult. If you get a hard test, it's going to be really hard. If you get an easy test, the thing about the 66 is a lot of people actually feel better during it than they are doing. Like I always said with the Series 7, you feel like you're failing the whole time. But with the 66, sometimes you feel better than you are because maybe you go too fast and maybe you answer B because it looked good, but C was a little bit better. So you have to really take your time on that. But the 66 is a hard one. Okay. Taking the 65 next week. If you're in the low to mid 80s on Kaplan, you're probably solid because Kaplan is significantly harder than the exam, more complicated, more detail, kind of hurts you. They add to your studying because they test so much, they go so deep in the weeds. But if you're scoring in the 70s and 80s and not memorizing, which it sounds like, you're going to be fine. Okay. Okay. Yes, Alec, if you're passing, I'm going to get to you, Mandy, in a second. Alec, yes. If you are passing both Solomon and Achievable without memorizing, you're in great shape. You're in good shape. If it's the SIE, And the 7 should be fine too. I don't love Solomon. I don't. I think they're on the weaker side. But if you're passing both, you're in good shape. Okay. So Mandy, a DVP RVP account. See, that's the thing. It's not DVP versus RVP. You won't get on the test. And if it is, it's a test question because it's not a thing. When I open an account, the actual form will say DVP/RVP on it. So they're not different. Okay. So hold on. Okay. Now, so if you have a prime broker, so we have the big ass prime broker called JP Morgan. I'll make up a name, JP Morgan. And then you're a little broker dealer who has customers that are executing for. You do not have the bandwidth, the infrastructure to hold securities and cash. So what they're going to say, you're going to do, so your customers are going to give you orders and you execute, but you don't have the securities or the cash. So they will set up a DVP RVP account with you and the prime broker, who that's how they will send the securities through you into the other side of the trade. So if you buy 1,000 shares of IBM, you have to pay $5,000, say it's $50 a share, and receive the shares. So the DVP RVP account facilitates that. It's just like a conduit where the JP Morgan sends the money through you to the other side. And then when the shares come to you, they go to you and up to JP Morgan. The STC loves to ask you the difference between DVP and RVP. And it's not really a thing because it is one account. So if you get them wrong, just let them go. So anyone, guys, everyone, hope we all studying hard for the Series 7, the SIE exam, and the 63 and the 66. Okay, Lisa. So Treasury bonds and Treasury notes. Gary, no problem. Happy to help. Okay. So the difference between Treasury bond and Treasury notes. So Treasury note. So let's talk. Bills are under a year. 1, 3, 6 months. They're 0 coupon. You buy them at a discount, right? Okay. T notes are 2 to 10 years. Okay. T notes are 2 to 10 years, which means that, and they pay a coupon and they are traded in 30 seconds. That's what they're quoted, not time wise. So if you see 25.04, that's really 25 and 4/30 seconds, which is an eighth, 24, 25 and an eighth. Just, it wouldn't be 25. But now, T bonds are the same thing, but they're up to 30 years. So T bills are up to a year. T notes are 2 to 10. T bonds are 10 to 30 years. T bonds and T notes are very similar. They both pay a coupon. They both trade in 30 seconds. Not 30 seconds a time, but 30 seconds like 32s. Okay. Hope that helps a little bit. T bills are actually the risk-free rate of return. The biggest risk with T bonds and T notes, more T bonds, is inflation risk or purchasing power risk. So for the SIE and the Series 7, you will absolutely need to know the differences between the two. Okay. Emily, I have the 3, the Series 3 I have the Series 4, I have the Series 7, the 9, the 10, the 14, 25, which is gone, the 24, the 63, 66, 57, and the 99. Okay. Yeah, I think that's it. Okay. Alicia, that's awesome. So yeah, that's it. Some of it's going to help. Okay. Thanks, you 310. I appreciate it. So, Wendy, how are you? And Gary, thanks for coming on. Lisa, thanks for coming on. Yeah, Alicia, you should be good. You should, if you have some of the concepts, you'll get. It's just the state regs that is going to take a little longer. Maybe it's funny. Everyone's afraid of the mathy part, the present value, future value, stuff like that. But that's not where they get hurt. They either get hurt on the state regs or the investment vehicles, which is like life insurance, mutual funds, annuities, stuff like that. Because everyone who takes the 66 has taken the 7, and they think, oh, I know the investment stuff. You don't, because it's life insurance and other things. Okay. What do you need for the 65? Yeah, okay, so I'll hit that. Okay. Yeah. Oh, Cassandra, Notman Marks is really hard, so you're in good shape. If you're scoring in the mid 70s or high with Notman Marks, you should be fine. And then my videos will help. Okay, so now 310 for the 65, you got to know the portfolio stuff. The 65 is such a broad exam. The easiest way to look at what you need, and I don't love using it, is go onto the NASA Series 65 content outline and look at that list, and they break it out how many questions are in each thing. But you have to know product knowledge. You have to know the state regs. You have to know the portfolio analysis stuff. There's a lot on it. It's not one of these where you take the 7 like 10 years ago and say, listen, get the options down and skate on the rest. It's definitely a lot of stuff. So yeah, Therese, even if someone's rich and they don't want risk, you have to go with the not risky stuff, right? So risk is there. And again, these are practice questions, okay? The vendor's practice questions are purposely vague, where I think the suitability ones on the actual exam are a little more straightforward. They tell you what you need. They're not going to hide the ball. So if you say someone's in the high tax bracket, but they wanted income, well, you're still probably going to put them in munis, or maybe you have to say, okay, is it a 10% corporate versus a 9% muni? Well, then the 9% muni will give them more, will give them a bigger return. Okay. Okay. Slim ammo. Did you watch my video? So mutual funds and ETFs, they'll definitely be on there. I have a whole video where I do 48 minutes covering mutual funds and ETFs and annuities. Okay. If you look at my SIE, the book videos, I have a whole thing on that. It's like an hour. That would be a 40-minute. We cover the entire time if I talked about mutual funds and ETFs. But here's the top points. Mutual funds, you buy and sell at NAV plus a sales charge. They're actively managed, but they don't trade during the day. Okay. They have an open end where every time you buy it, you have to get a prospectus, and they have forward pricing. You cannot buy them on margin. You cannot sell them short. You buy them at NAV plus a sales charge, which is a POP, and you redeem them back to the company at NAV. ETFs are passively managed. They're very transparent. You can buy them during the day. They trade more like a closed-end fund where you're buying and selling in the middle of the day. Okay. Now, if I have, welcome, Bonnie. So ETFs trade all during the day. You can buy, if you buy it at 10 in the morning and I buy 10 in the morning and I buy 10 at 2 in the afternoon, we're getting different prices. If it's a mutual fund, you buy 10 in the morning and I buy 2 in the afternoon, we get the same price because they have forward pricing. Go take a look at those videos on my SIE, the book. I think it's chapter 7, 8, and 9. It's called Mutual Funds and Annuities. It's going to help you, I promise. Okay. And I wouldn't go to limited partnerships. The big thing to know about limited partnerships is that for the SIE, the biggest thing for the limited partnerships, know that they have a pass-through, which means all of the income they get passes through. So if you and I are partners in a partnership and we make 10 grand, you get 5 grand, I get 5 grand. But then say it costs 3 grand to do that. Say there's costs or losses. You get $1,500, I get $1,500. We don't owe it. It just becomes a write-off. So partnerships pass through. A couple of things they don't have. One, partnerships are not liquid. Okay, so if you buy into it, there has to be a liquidity question. Do they need their money? 2, to get in, you need the general partner has to allow you in. If he doesn't allow you in or she doesn't allow you in, you're out. You can't get in. And they have a pass-through. They're not liquid. That's the big thing. And you have to ask someone, are they able to handle the not liquidity and be able to handle losing their money? Okay. Opening purchase, closing sale, I can do that. Okay. Cassandra, before I do, I know you're taking a Friday. Go take a look. I have a whole video where I do it on charts. I have a whole thing, like maybe I did the video like 2-3 minutes, maybe a month ago, where I did a whole thing with video and everything, buy limits and sell stops. But I'll do a quick one over that. So Georgiana, so when you get into an option position, whenever you create a position, that's called an opening. Okay, it's called an opening position. So if you buy options, you're doing an opening transaction. Okay. So if you buy options, you're doing an opening transaction, and that's an opening buy. And then to get rid of it, you do a closing sale. So option transactions. So if you buy a call or buy a put for the first time, that's an opening, and it's followed by a closing sale. If you short a call or short a put for the first time, that's an opening sale, and it's always followed by a closing buy. So keep in mind, whenever you start a position, whether it's a buy or sell, it's opening. So if you buy buy an option for the first time, opening buy, followed by a closing sale. If you short an option for the first time, it's an opening sale versus a closing buy. Hope that helps. Okay. Now, break down sell limits. Okay. So, okay. Well, no, Ricardo, I definitely think they do. I just think a lot of their stuff is too deep for the exam. Okay. Oh, Alex, yeah, you're fine. If you're scoring in the mid 80s, if you're scoring mid 70s and 80s between Solomon and Achievable, you should be fine. If you're barely passing, then you got to kind of supplement that a little bit. Okay. Back to this. Okay. Now remember the rule, guys. You ask one question, and then after I ask your question, then you can ask another one. Okay. Yeah, I'll stay here for a while if you want. I have no students after this, but I want you to remember. So, if you ask one question, hold off on asking a second one until I answer your question. This way, other people get a chance. Okay. So now, sell limit. So if stock is trading at 5, now again, I'm doing it quick because I'm abusing it because I have a video that covers this. It's like a 12-minute video, and it'll help you a lot. So if stock is trading at $50 and you want to buy it, but maybe you don't want to buy it at 50, you say, listen, I want to buy 100 shares at 49. So a buy limit is placed below the market. You're saying I'm willing to buy it, but I don't want to pay more than $49. It's like when you go to say, listen, I'm going to a flea market and you see a really nice pashmina or something like that, and you don't want to pay $12 for it. So you say, I'll buy it for 10. Okay. So you're placing a limit. You say, I want to buy it at 10. I will not pay more than that. That's a buy limit, and it's always below. Maybe you own the stock and you want it to go up at 50. Maybe you want it to go to 55 or 60, 57, 58, and you want to sell it and make some money. So you do a sell limit. You'll say sell 100 shares at 57. So when it trades up to 57, you'll sell it. Or on the buy limit, when it trades down to 48 or 49, you'll buy it. So there's no trigger. There's no second price. It's just when it trades at your price, you'll buy it or sell it. So buy limits are for the Series 7 and SIE. Buy limits are you're buying at or below, or you're selling at or above. It's even could be on the Series 66. Now, stop limits. Say the stock's trading at 50. You're afraid it's going to go down. Maybe you've done your math and you think, okay, anything below 55, say it's trading at 50, and you say anything below 45, it's going to drop. So what you do is you'll say, okay, sell 100 shares at 44, stop. Which means if the stock gets down to 44, triggers, and then you're going to sell it on the next trade no matter what, okay? So if the stock is trading at 50 and you decide if it goes below 55, you want out, you say sell 100 shares at 54, stop. And as long as it's above 54, no one even knows the order's there. Once it trades at 54, it's going to trigger, and then you're selling it on the next trade no matter what. Okay? It's like to stop the bleeding. Puts are better because you don't have any loss, but these things protect you because they get you out before it goes too low, hopefully. Now, on this upside, again, Series 7, SIE, 66, this could be on there. If you're short the stock at 50, you want it to go down, we know, but you're afraid it's going to go up. So what you'll do is you'll say, okay, if it gets above 54, just sell it. Just buy the damn thing. So you say, did I do that right before? 44. Okay, so I'm going to do this again. So a 50 stop, you set a 44 stop, sell stop. You have to do it below. See what happens when I talk too fast? Stock's trading at 50. You're afraid it's going to go to 45. So you do sell 100 shares at 44 stop. Once it trades at 44, it'll trigger, then trade. On the buy side, so maybe you're short it. You're afraid it's going to go up. You don't want to lose all that money. So you'll say, listen, if it trades above 55, I want to buy it. So you'll say buy 100 shares at 55, stop. So once the stock trades at 55, it's going to trigger, which means it'll turn on, and then you will buy it at the next price no matter what. Okay? So it'll buy. So basically, stock's trading at 50, stock trades at 55. All of a sudden, the order goes on, and you'll buy the stock no matter what price. It could be 90, it could be 2, it could be 30, any price. You're willing to buy it at any price. That's a real quick one. But go find my order type video, maybe a month ago, maybe 3 weeks ago, and it does it on a chart, on the whiteboard and everything, and I've gotten some good feedback on it. Now, Mandy, on stock splits. Okay, so the differences are, so a stock split is when, and I have a video on this too, so you can find that after I'm done. A stock split is when a company thinks the price is getting too high. If you think I'm helping you, please hit like. That always helps. Okay, makes me feel good, makes my ego blow up. If you say you own 100 shares at 50, or let's say not 50, let's say the stock's trading at $2,000 a share and the company thinks that's too high. So we're going to need this for the SIE and the Series 7. You will definitely have questions on this. Okay, thank you guys. So I appreciate it. So if the stock's trading at $2,000 and you own 100 shares and they do a 2-for-1 split, that's an even, anything into 1, 2-to-1, 3-to-1, 4-to-1, those are even splits. That means the way I do it, I divide the first number by the second. So I do 3, say I do a 2 to 1. I do 2 divided by 1, that gives me 2. Then I do that. I multiply that times the number of shares. So 100 times 200 is 200 shares. I now have 200 shares. Then I do the stock price of 2,000 and I divide that by 2, because that's my multiplier. 2,000 divided by 2. So now it's 1,000. So now instead of having 100 shares at $2,000, I have 200 shares at 1,000. But let's say we do a 3-for-2 split. So that means you're getting 3 shares for every 2 you own. But let's make an easier number. So let's say you own 100 shares at 50. I do a 3-for-2 split. This is called an uneven split. Okay. So an uneven split is when you do, it's not into 1, it's into anything other than 1. So I have 100 shares at 50. So I'm going to do 3 divided by 2. 3 divided by 2 equals 1.5. That's my multiplier. So I'm going to do 100 shares times 1.5. That gives me 150 shares. And then I'm going to do 50 divided by 1.5. 50 divided by 1.5 gives me 3333. So I'm going to get, if I started with 100 shares at 50 and there's a 3-for-2 split, that means they're making it nicer looking. So now I own 150 shares, but it's only worth 3333. Same amount. It's still worth $5,000. Now, why do we do splits? I'll do the reverse in a second. Why do we do splits? To make the company look more attractive. If the stock's trading at $2,000 a share, very few people can buy it. Rich people can. So maybe what they do is they do a split. Like I think Tesla did it when it was at 1,500. They did a 5-for-1, which means for every 1 share you own, you now own 5. So I think it was at $1,500. If you own 100 shares at $1,500, I wish, you now own 5-for-1. 5 divided by 1, that gives me a multiplier of 5. 5 times 100, I own 500 shares. I do 1,500 divided by 5, 300. So now instead of owning 100 shares at 1,500, I now own 500 shares at 300. Same thing. A reverse split is the opposite. It's like a 1-for-5. You do the same thing. 1-for-5, you do 1 divided by 5, that gives you 0.2. Then if you have 100 shares at 50, you do 100 times 0.2, you now have 20 shares. And then you do 50 divided by 2, that's 250. I think that's the number. So what it does is it makes the stock look better, like raising the price. They wouldn't do it when the stock's trading at $50, but they might do it when the stock's trading at like $3. Citibank did that. Citicorp was trading at $4. They could not get it above $5. So they said, fuck it, let's just change it up. They did a 1-for-10 split. So if you owned 100 shares at $4, now it's split, and now you own 10 shares at 40. So it looks better. So it's a $40 stock. Reverse splits are usually a bad sign. In this case, it wasn't. It was just to get the price up. That's all it was. So reverse splits are when you're going to get less shares worth more. And then a regular split is just you're going to get more shares worth less. But the total value never changes. It's a marketing tool. If it's too high, we do a split to make it low. If it's too low, we make a reverse split to go up. Hope that helps. Okay. One, I'll get to you. I'm having trouble with wash sale. Example, a client of yours buys 600 shares of ABC at 52. 1 year later buys, okay. So here's the deal. So Teresa, they're trying to confuse you, and it's, okay. So a wash sale is when you sell shares for a loss, and then you buy them back either 30 days before or 30 days after. So what happens is the IRS will say, okay, you sold shares for a loss on December 15th. They will look forward to January 15th and back to November 15th to see if you bought shares, okay? If you bought shares, okay? If you bought shares in that 30-day period, they will disallow the loss. So in her case, bought 600 shares at 52, bought another 600 at 13, 27 days sells the shares. The new cost basis you're going to add, they're not going to go that crazy on you, but you're going to add the loss to your 18. So you bought the shares at 27, you lost 52 minus 18. Oh, wait, bought the shares at 13. So they're going to add the loss onto your $13. That's what they're doing. So the difference between 52 and 18, they will add to your $13 gain. Okay, so always look backwards. Most of the time, they're just going to ask you what the hell a wash sale is. So a wash sale is when you sell stock for a loss and buy it back either within the 30-day period before or after. They wipe out your loss. You still lost money. You just can't reduce it off. You can't use it to reduce your taxes until you actually fully sell it and stay out of the position. So that will be on the Series 7 for 100% sure. Okay. Okay, Juan, you just missed it. Okay. There you go. Look, you were for Chase. Isn't that funny? Okay. Juan, very close. That's okay. So what you're going to do, okay, this is what I tell everyone. If you did it today, whenever it was, go back and just write down everything you can remember about the exam, throw it in a vault. Then what I want you to do is start reading the book like it's new, okay? Don't get a new vendor unless you really need to. You can get the Achievable, STC, Kaplan, whatever. Just start from the beginning and read cover to cover. Don't take a lot of notes, just read. So again, that's why I do my fail video that I just published. I think if you guys watched the trailer, you probably saw it. If you fail, nobody gives a shit. Nobody cares, okay? Now, what you do is start over. You got 30 days. You got the magic of 30 days. Read the book. Don't take quizzes. Don't take anything. Just read the book cover to cover. Options, margin, and like technical stuff, just do questions. Don't worry about reading again. Hopefully you're okay with that. And then just read straight through, get it. And then once you're done, start doing chapter quizzes again, and then start over. So what you're supposed to do is now from today forward, you act like you never took the exam before and just take the damn test. Hope that helps, Juan. And again, it's a 30-day problem in a 20-year career. Nobody gives a shit. Once you pass, nobody cares. Once you pass the Series 7, the 63, 65, 66, 6, SIE, nobody cares at all. Okay. Alicia, on the 66, what kind of questions and how many? Yeah, it's not that hard. So you might get, let's see, how many did I see? On accounts, I saw 3, 4. Let's say on the high end, you'll see like 12 questions on all the retirements, Roth, all that stuff. Maybe 13, maybe 8, somewhere in the 8 to 12 range. Even though the books say maybe different, I felt I saw quite a few. Not a ton, but I at least saw 2 or 3 retirements, 2 or 3 account stuff, 2 or 3 trust things. You know, they're not hard ones, not super detailed, but those are, for people like you, those are, boom, okay. Okay, so here's the thing. So Alec, if you really want, yeah, remember, Emily, you're right. I don't need the 6 because I don't, because I have the 7. No, see, Ricardo, that's not true. I'll hit you in a second, Alec. You can do something. You can sell mutual fund and annuities and stuff like that with the 6. And you don't need that. If you're working for a bank, sometimes you don't need the 7. Okay. Alec. So really, if you look at my videos, if you do the, you can either do the membership or you go to my website and buy them. The single ones are good. Just buy the hedging. I have one on hedging. I have one straddles, and I have one on spreads. Just buy them. Don't buy the single ones. You're good to go, right? So if you're good to go, then don't worry about the single ones, or just join the membership, and then you get access to all. That's the easiest way. And if you don't like my way, go reach out to Brian Lee, and you can buy his problems too, I think. Okay. He doesn't. My way is game changing. It's fucking awesome. Everyone else does like more T charts and stuff like that. Okay. So Colin, okay. There's not a lot of finite details. Okay. That's the thing on the munis. Okay. Thank you. I appreciate it. So, let's see. Oh, Rebecca, I have one called spreads. I do. So it's one called spreads if you look under MSRB, Colin, I'll get to you in a second. If you look in the MSRB playlist, there, thank you, Joe. I appreciate it. Nahar, how are you? Where are you? Rebecca, go look in my MSRB thing. And I think the last video is this thing on spreads. It's more about just the underwriting takedown, stuff like that, if that's what you need. I'm working on the other stuff. Okay. So, okay, so about the munis for the Series 7, Colin, it's not finite details. Is mostly suitability. Yes, you'll get a couple questions like how much can you contribute for under MSRB, or maybe how much can you contribute to a politician? You might get like what's the bond buyer or something like that. But it is mostly going to be about suitability and who should have and who shouldn't. Really, that's a lot for the Series 7 and the SIE, not so much. But for the Series 7, yes, you'll have to know the differences. You have to know it for. You do not have to know every little thing about the rev decks and stuff like that. You will have to know why someone buys a muni, why someone wouldn't, and what are the advantages. Like you have to know the tax equivalent yield. That is why I'm getting into Trish. If an RR would like to sell a muni that their client does not reside, you can still recommend it if it's the best choice. So you would have to probably do the tax equivalent yield and compare the bond in the state, yours in his state or her state, compared to the one out there. So you can recommend it, but know that they will probably pay state taxes on it. So you have to do that. Like say it's 10% state taxes, you will have to multiply the tax return of the bond in the other state times 90% to determine what you're going to get after taxes. Okay, so for the Series 7 exam, you might get a question like that, and yes, you can recommend it if it actually would pay a better return after taxes than the in-state muni. Okay. Oh, Nihar, the CFA is going to the essay is going to be easy for you. Okay. Yeah, Joe, the slobs over bliss is on that. So Nihar, yeah, if you have CFA level 2, the SIE shouldn't be that hard. You should most worry about the rules and regs. Like if you have STC, the back end of the book, all the regs and rules you may not know from the CFA, but any of the other stuff, this should not be hard for you. Okay, just get the rules and regs down. That's the big one. Okay. Slobs over bliss. What does that mean? That means sell limits and buy stops are above the market. Buy limits and sell stops are below the market. I'm only 17 minutes behind everyone. So, okay. Dustin, awesome. That's awesome. I know I'm 15 minutes behind. That is awesome. Okay. Yeah, you can keep watching for the option stuff, but that's awesome. Good luck on the Oh, how bad is it? Okay, he figures the Red Sox are on. And we're just spotting him a lead. Okay. Audra, how are you? Okay. Dustin, again, I am so happy for you. That is awesome getting done. And the 910's a serious test. Okay. I'm only fit. Oh, that's funny. Interview with the director. Okay. Caleb, good luck. Oh, you know, it's funny. Stefan, who used to come on here, got a promotion. Okay. He got a promotion for the he's moving up. Okay. Yeah, Mandy, I can fill up. Okay, so fill or kill. Okay. Fill or kill. So if I give you an order, so what you know what all or not, I know I'm only 6 minutes behind now. So Mandy, so a fill or kill order is this. Before we start, if I give you an order to buy 100 shares, all or none, that means buy not all or none. Say buy 1,000 shares at 50, all or none. That means I need you to buy all 1,000 shares at 50 or don't bother, but you can stay there and hang out and try to get the 1,000 shares. Or I can give you buy 1,000 shares at 50 immediate or cancel, which means buy as much as you can at 50 and then cancel the rest. By the way, Caleb, good luck tomorrow. If I say buy 1,000 shares at 50, IOC, immediate or cancel, that means buy as much as you can at 50 and cancel the rest. No harm, no foul. But I will take partials. Fill or kill means buy all of it at 50 or not, then cancel. So if I give you 1,000 shares to buy at 50, fill or kill. Stupid order. And there's only 900 shares offered, I will buy nothing and then cancel the order. That's what a fill or kill is. Fill or kill is fill it means do all of it, or kill it means cancel it. Immediate or cancel means buy as much as you can immediately and then cancel it. All or none means buy all of it or none of it, but you can stay there all day. Okay. Trying to catch up. So Alec, if you go to your if you go into under my screen, if you have a phone, you can't see it, but if you go on your desktop, there should be a button that says join. Boom. If you do the $10 one, thank you for the segue. On the membership, if you do the $10 one, you get access to the options and early access to the membership videos. If you buy the $25 one, you get access to the options plus the early action to the membership, plus I do a once a week Zoom call. I do at 6 p.m. Eastern on Sunday for the series 63, 65, 66. And then I do one for the 7 at 7. I couldn't do them together at first. The problem with the Zoom call, it's not one-on-one. It could be 3, 4, 5, 6 people. It could be unlimited. If it gets really big, I'd probably split it up. But right now, it's not too big. So that's what that works. And then the $99 one gets you all that, plus every other week I do a one-on-one or 2-on-1 Zoom call. Okay. But you go on, you go right under my screen if you have a desktop, and it should say join. Hey, under there should be join, and that should work. It usually works on a desktop. Okay, let me get to Therese. If an investor is bearish, what fixed options matches long calls? So remember, because remember that the VIX goes opposite of the market. So the more volatile the market is on the Series 7 and SIE, you might get a question on this. Maybe even the 6 could be. So if you think the market's going to be volatile, like go up and down a lot, or even just drop, because usually markets go like this: up, 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 bang, down, up, 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 bang, down. So usually the volatility means it's dropping. So if that's dropping, going up and down a lot, the VIX will go up because just like it just goes up. And if the market calms down, the VIX comes down. But then once it gets crazy again, the VIX starts going up again. So if you're bearish on the market, you would buy VIX calls because if the market gets more volatile or bearish, the VIX goes up. Okay. Yeah, level 2 is shit. I think Caleb's studying for the CFA 1 now. Yeah, CFA 2 is some shit. You saw this summer, what, only 22%? You guys saw only 22% pass last summer? That's crazy. Yeah, I still think, I remember before the pandemic, they used to talk about how maybe it was like maybe 40%. I forgot what the numbers were, but they always skewed it. They would curve it to make sure only a certain amount passed it. It's kind of crazy. Okay, one for me. Okay. Okay, so very broad questions, Alicia. One more for me tonight. Can you talk about what are the most important things to know about the 66 for the Active 33, 34? Okay, I did the 2 videos on them if you find them, but you got it. I mean, you just know the basic rules. Like the Active 33 is for new issues, IPOs, coordination, for the federal covered advisors. It's all about new issues. 34 is about the trading. That's where the MISPREMS acronym comes in, which I talk about. Manipulation, insiders, short selling, SEC, created, proxy rules, voting by mail. Exchanges and broker-dealers have to register. So remember that the Act of 34 makes broker-dealers register with the SEC. The Act of 40, IA Act of 40, makes the IA, federal covered IAs, register with the SEC. Then we have R reports, 8K, 10Q, 10K. M for margin. And then S, if I already said that already, then manipulation, and S for stabilization. So Act of 33 is primary. Act of 34 is for secondary market and trading, non-issuance. Hope that helps, Alicia. Okay. Rebecca, you got this. Just keep practicing. You're going to get it. Okay. Good. Yeah, I mean, sort of. If it's for the SIE, yeah, I have that. That should be in there. I think it's one of the middle ones. I mean, so it's like, think about this. So trying to think the best way to explain it. It's like things that are wrapped in other things, like mutual funds, ETFs, stuff like that. So that's, I didn't shut it down, did I? Oh, that would have been really bad if I shut it. That would have been really bad. Okay. So I think I do. Look in the middle with the mutual fund ETF section. It should have it there. If not, I'm trying to get through the Series 7 book. I've been so busy lately, which is good, is, hurting the video part. Okay. Right. So it's funny, the level 2, it used to, yeah, so Lisa nailed it. Look, I think she was down at first, and then boom, now she's the happiest person in the world because she beat that thing. Okay. A lot of people missed the first time. I think I had another student that came into me after she missed once, and then she was so nervous, and then she took it at home, and then she was screaming. Okay, because she's so happy. Again, what they did, remember, the big thing about if you fail is you got to go back at it like you've never studied before. Don't shortcut it. Okay. Yeah, the level 2 stuff. I thought I remember the level 2, you find out like only a month before you can take the level 3 or something like that. So you almost have to study while you're waiting for the score. Okay. Oh, that's funny. You're not getting there. Okay. Okay, you don't really file anything with the SEC. That's the best way to know. Nothing really gets filed with the SEC except for like 10Qs, 10Ks, and stuff like that. And again, it's not. These tests aren't this way. Okay. These tests aren't that detailed. Like, when do you do it so much? There's always a couple questions, but you don't really file shit with FINRA and the SEC that much. Most of the stuff's you just hold on to it, or maybe you file advertising with the administrator, or if your first year of business, you file the advertising with the FINRA, or if it's mutual funds, CMOs, options, futures, and limited partnerships. Yeah, you have to file your advertising either 10 days before or 10 days after. That you can look up. I have that in the communications chapter. Okay. Alicia, have a good night. See you on Sunday night. Okay. Maybe Thursday if you're awake on Thursday. Okay. Yeah, I agree. So got to know the bond teeter totter, right? Or I use a triangle, but whatever it is, you have to know that on a premium, it's coupon, current, yield to maturity, yield to call. And on a discount, it's coupon, current, yield to maturity, yield to call. Remember that order. Coupon, current, yield to maturity, yield to call. Coupon, current, yield to maturity, yield to call. Got to know that. Okay. Again, it's Mandy. It's not that detailed a test. None of these tests are super detailed about what gets. And really, again, the only things filed with the SEC are like the registration statement, which is done right on time, the 10Q, which is a quarterly report, 10K is annual, and the 8K is when things are like special announcements for things. Okay, to know. Okay. Therese, are you using Past Perfect? Okay. Because you have to, Therese, they can't ask that question unless you give me the choices. They just don't. Okay. Yeah, Nihar, yes. Okay. I absolutely think, okay. That's good. So, yep. Yeah, I can do hedging in a second. Yeah, so I think I scrolled past some stuff. Hold on. Yeah, so Bonnie's taking the SIE. If anyone else is taking the SIE, you can probably start a little study group or something. They did it for the 7. They do it. I think there's only 2 more sessions left with Jacob. They did it for the 7, and I think it worked really well. So if anyone's taking the SIE, shoot me an email, and I'll try to hook you guys up, and you guys can do a group or whatever, or just reach out to Bonnie or whoever directly. I think Cassandra's taking it soon, stuff like that. And sometimes, guys, even if you're farther along than the other person, it helps to have to explain stuff to them. Okay. Yeah, Nihar, 30 to 50 hours for you is probably more than enough for the SIE. Okay. Yeah, and then the 7. Okay. So yeah, they do that. Okay, so you understand you can't actually figure out you will never, ever, 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 ever have to do yield to maturity on an exam. You may have to understand the relationship. So that's why I said you need to see the choices, Therese, because you have to figure out current yield, and then it has to be below that if it's a premium, or above that if it's a discount. So it's a premium if you do 7 divided by 105. If you do 7 divided by 119, since it's a premium, I'll do that. 7 divided by 119 is 5.8%. That's the current yield. So the yield to maturity has to be below that, right? That's how they do yield to maturity on this. Okay. So here's the thing. So yeah, there you go, Joe. Love it. Okay. So yeah, Stefan, I was just talking about it. Did it tell you? Okay. Okay. That's awesome. I just mentioned you how happy I was you got your promotion. That's awesome. Good. So when you're managing director, you can make sure I do all the training for Fidelity, baby. Okay. Okay. So Alexander, yeah, Past Perfect. Here's the thing. If you're passing Past Perfect, you'll pass the SIE, but they go so deep, so fucking deep, so deep into the exams that it's ridiculous. Their math, they make you do yield to maturity. They make you do current yield. They do a lot of math current yield's fine, but they make you do so much math. They go so deep on the options for the SIE, but that's fine. If you can at least understand that you don't have to get everything right, they ridiculously go so fucking far in. Like I used to love them, but now I just couldn't even recommend them. No, you will pass. If you're passing their stuff, you get it. Okay. So now hedging. Hedging is when you're protecting yourself. So look, if you're long stock, what do you want to happen? You want it to go up. You want it to go up because you're long stock. What are you afraid is going to happen? You're afraid it's going to go down to like 30. So if you're long shares at 50, if you're long 100 shares at 50, you're worried it's going to drop. So wouldn't it be nice to be able to buy an option that would let you sell stock? Which one does that? Buying a put lets you sell. So if you're long 100 shares at 50, you buy a 45 put at 2. No matter how low the stock goes, you can still sell it at 45, even if it goes to 0, and all you lose is like $7. So hedging is protecting yourself. So or even selling a call would protect you a little bit, give you a little bit of money. If you're long stock, you either buy a put for protection or sell a call for income. And what happens is if you buy 100 shares at 50 and you sell at 50 call at 3, if the stock drops by 3 points or less, you're still kind of okay. On the short side, if you're short stock for the Series 7 and the SIE, there's much less on, but this will definitely be on the Series 7. So if you sell short 100 shares at 50, you want it to go down. You're afraid it's going to go up. So you will buy a call because no matter how high it goes, if you buy the call, you're locking in a price. So even if it goes to 90, you get to buy it at the price of the straight price you bought. So again, hedging is protection, okay? So if you're short stock, you buy a call or sell a put. If you're long stock, you buy a put or sell a call. Okay. Stefan, I'm so happy for you. Audra, I love it. Okay. Okay, so do I agree with it? Brain dump sheet for the 7. Yeah, I'm always a fan of those. Okay, so yeah, it has to be 4.66, Therese, because it has to be below the current yield. Okay, awesome, Stefan, I love it. Okay, okay. Now, yeah, Alec, yeah, I would say start build it up to make sure you got the slobs over bliss, get the options box, maybe what I just said, where you're long stock, what hedges it, maybe put the margin formulas on there, maybe a couple other things. I do agree. I think doing it, but it used to be better until they went back to the markers because then it's harder to write on there. But it's still doable. I just think it's not. It used to be paper and pen, and then you could just fill as much as you want. Now it's marker, which is tough to do. Remember, so because Therese, if you have a premium bond, yield to maturity has to be below the current yield. If the current yield is 5.88, yield to maturity has to be 4.66. So, guys, if you're taking the SIE, so guys, everyone, go on my website, series7exam.org, get my email, shoot me an email, say SIE group. I will hook you guys together. I'm not doing it. You guys, I'll hook you guys up on an email chain, and you guys can figure out what to do. Because Jacob did it, and it became really successful. He had a rotating bunch of people in there. But Jacob's done after Georgiana passes on Friday. And then there's maybe 2 more sessions, and that's more for the 7 than anything else. I also do that. Remember, I also do the Zoom call for $25 a month. Shameless selling. Is I do the Zoom call where we talk about stuff every Sunday night. Okay. And it's a back and forth. It's a limited, it's not limited, but we don't have more than like 6 people in there. Okay. Treasury, Jessica, you're gonna nail it. Get ready, keep reading. Focus on reading. Okay. Yes, Alexander, they go fucking nuts. I'm glad my helps. I try to simplify everything. I agree. Okay. But yeah, they go so freaking past perfect, takes everything to the next level. That's why I'm pushing everything to the achievable. That link I have in there. Oh, another shameless plug. I try to push everything there. It's like $74, and it explains everything for the SIE off the charts. Emily, who's on here, was like depressed. She thought she'd never pass. And Brandy, I will get to your question. She thought she'd never pass, and then she was depressed, and then she took this, and she's about ready to take these things. It reinvigorated her. Okay. So Brandy, IAR. Okay. So an IAR works for the state only. He only registers with the state. So here's the deal on this. If they're giving advice in a state, they have to register. Here are exceptions, though. If they have no office and 5 or less clients, they don't have to register in the state. Once they have either a place of business, office, or whatever, or 6 clients, they have to register. The exception to that is if they are working for a federally covered IA. So an IA this is for the 63 and 65 and 66. If they're working for a federally covered IA, investment advisor, one that's registered with the SEC, an IAR only has to register where they have a place of business. The number of clients does not matter. So they could have 1 million clients in the state. If they don't have a place of business, they don't have to register. But that's only if they're working for a federally covered IA. Okay. But if they're working for a state, then the numbers matters. Trish, happy to help. Okay. So Mandy, Treasury, I'm going to kill it in a few minutes. At 9:30, I'll cut off the questions. Then I'll just finish them up. So, yeah, that gives me about 5 minutes, right? So Treasury arbitrage is when like a town, remember, towns don't have to pay taxes. So towns and the bonds they issue could technically be lower than treasuries because they're tax-free. So it's like a town or city or state issuing like $1 million worth of bonds at 4%, not that they're this high, and then using that money to buy treasury bonds at 5%. They're not allowed to do that. Okay. They can do it if they're doing a pre-refunding, which I'll talk about Thursday if you want. I'm going to try to do a video before that on it. So if the city or the town or the state issues a bond for 4%, and then they use that money, to buy treasuries that are higher returning, they can make the difference. So if they issue a 4% bond, buy 5% treasuries, they make it 1%. So the government doesn't allow them to do that other than to do pre-refunding. So guys, anyone who wants to do the SIE group, hit me up. I should go to my website, check out my email, series7exam.org, shoot me an email, and then I will try to send you a chain email, see who wants to do an SIE group together. Okay. But I'm not going to be on it. I'm just going to give it to you, and then I'm not involved. Okay. Okay. Yeah, you'll never have to do. Okay.
Sorry, I can't help with that.
Siri, thank you. Freaking iPhone. Okay. Yeah, I think. Yeah, I know that's so funny. Okay. You want to have? Oh, there you go. Go on my website. I'll try to send you one, Brandon. Welcome on. Basic Wisdom on here. He's the guy who wrote all the achievable questions. He's the man. He has great videos. After we're done, go check out his stuff on Basic Wisdom. His channel over there. Okay. Okay. What about it, Mandy? I've never seen a question on bond volatility ratings. Okay. Okay. No, don't worry about asking a lot. It's fine, but I don't know what that means. Don't ever apologize, okay? But I don't know what you're asking. It's just volatility ratings. The volatility ratings are if they do self-created. This is the only thing I can think of. If mutual funds do a self-created volatility rating. Perfect, Bonnie. I don't see that. I'm hoping somebody else does it too. If they do a bond, if they self-created volatility ratings, then they have to submit then the person issuing the research or the ad has to submit the stuff to FINRA 10 days before first use. Okay. So now, Teresa, collars and strangles. So the collars are definitely on there. Strangles might be. They're doing it just to make sure you understand it. So a collar is like, look, if you're long stock and you want to buy a put that costs money. So what you can do is you can sell a call to get the premium to buy the put, which gives you protection. Okay. So if you're long stock, you can sell a call and use that premium to buy a put. So what happens is you're limiting your upside because you can only make money up to this call strike price. And then you use that money to buy the put to protect yourself on the downside. It's kind of a nice way to do that. I worked with a guy and his entire job is to find collar opportunities where they could sell the calls for more than the puts and make a little money at the same time. Okay, everyone. Thank you very much. I agree. Anyone who's taken the SIE, please reach out to me. Shoot me an email. I'm from my website, series7exam.org, and check out the group and try it now. A couple quick things, guys. If you want help, I'm here to help you. Reach out. I can do some tutoring. If it's too expensive for you, drop down. We can do Michael Weiss. I think he's under $100. And again, as Alicia knows, he's series7exam.org. Good night, Stefan. Congrats again on the big win. He walked in, he started in May, he got a job, and then he got a promotion. Mandy, no, we're going to help you. So that's the whole job, is to get everyone past this thing. One day, I hope to have no one here. Georgiana, good luck. If you don't come on Thursday, good luck. You're going to rock this thing. If I'm too expensive, go down to Michael Weiss at series7examtutor.com. Free resources, me, obviously. You got Brandon Rith at Basic Wisdom. We have Dean Tinney over on his channel. And if you guys really want some quality shit, go. And then Brandon comes on here sometimes and he answers stuff. Okay. So, started in June and he's already got a promotion. Look how fucking quick that is. So go to Achievable. You can buy that stuff down there. It's dirt cheap and it's fucking good. I think he's almost done with the 66. So they have the SIE Thursday's Q&A also every Tuesday and Thursday at 8:30 p.m. And anyone taking the SIE, reach out. We'll set up a group. You guys can all talk to each other. You could even combine 7 and SIE because it'll work. Yeah. I would have to let him run that, Joe. I couldn't do the CFA if you tried. That takes actual brains. I don't have brains. That would work. So go in here. If you want STC, I give you a nice discount on there. Achievables on there stuff. If you want free reading, go hit the Kindle Unlimited link. We're good to go. Everyone, have a great night. Wash your hands and go Bombers, baby. Let's go Yankees.